I'm Ben Gonzalez, and this is TDI. Well, today we're talking about life insurance and some of the most common questions that we see about that online. And joining us to help answer some of those questions is John Carter from our Life and Health section. Hello, John.
Hi, good morning, Ben.
Well, let's just start with the basics. Who should be getting life insurance? Is that something that everybody needs?
Yeah, that's a very good question to start with. So, essentially, anyone with a family, business, assets, and people to protect. The life insurance just isn't for people who are married and have children. Singles need life insurance just as well. So, the answer to your question is everyone needs life insurance because everyone has someone to protect or someone to provide for.
Well, given all those kinds of different situations that you touched on there, I guess it's important to understand a couple of key concepts that often come up. Yeah, can you help us with the difference between term life and permanent life insurance?
Sure. Term life and permanent life are two of the very basic types of life insurance that you can purchase. Term life is very simple to understand. It's also generally the least expensive. And the word term means exactly that. It's either based on a time period or your age. And when you get to the end of the term period, then the insurance ends. So, for example, you could purchase a 10, 20, or 30-year term period, and at the end of that period, the insurance ends. There's no cash value. The insurance is over. You could compare it to, say, your homeowner's policy or an automobile policy, where when you get to that 1 year or that 6 month time frame, then your insurance stops. But in those cases, it's renewed. Term life can be renewed at the end of the term, but it also can be very, very expensive to do so. It can also be based on your age. So some people may choose to have a term period that ends on their 65th birthday, or maybe when they turn 95. Whole life insurance, which is also called permanent insurance. Permanent is really more of a technical term. It's not a term that you would typically use when you're talking with an insurance agent or what have you. But permanent means just that. It's permanent. It's there for your entire life. This is normally sold as whole life. And whole life insurance can be expensive, but it's expensive because it lasts your entire life until you die, and then the policy would pay out.
Right. And I think that those are very key terms to understand because when people get a term policy, there may not be a payout. You're just covering yourself for that portion of your life when you may have obligations to other people.
That's absolutely correct. So term life insurance, one of the reasons that it's inexpensive is it doesn't accumulate any cash value like a whole life policy would. So the only value to the policy is the amount of insurance. Other than that, there's no value to the policy. So a whole life policy will accumulate cash value over the years. Now, the cash value does not equal the amount of insurance until you approach the very end of that policy.
We know that some people have the option to get some life insurance at work. Is that usually term coverage, or is that something completely different?
Yeah, generally workplaces will offer a base life insurance policy for all employees, sometimes at no cost. Those amounts are going to typically be very low. They'll be, maybe $5,000 or $10,000, basically enough to cover your funeral costs. But yeah, those generally are term policies, and the term in that case is the length of your employment. So when you're
while you're in the job,
right, while you're at the job. So if you're there for a month or 6 months or a year or 30 years, then you'll have that coverage. One thing that employers can do is offer the opportunity for the person to purchase additional insurance at their own cost. And those are generally based on a multiplier of your income. And what the employer chooses to offer is entirely up to them. It is important to understand that employers are not required to offer life insurance. They're not required to provide you with a base life insurance coverage. That's just generally considered an employee benefit. If you do need to change, for example, you start a new job, and these things are normally discussed during your new employee orientation, and you're filling out a bunch of paperwork with the HR people, and they're telling you to check boxes and sign here, and you may not really be reading through everything. If you're not sure, contact your human resources department and say, "Hey, do we have any, base life insurance coverage? Do I have an opportunity to purchase additional insurance at my own cost?" And they may say, "Yes, we do. And if you choose to make changes, you can do that during the employer's annual enrollment period." And that's when you can make changes. You can also generally make changes when you have a life event. And that would be, say, you get married during the course of your employment. You decide, I just have this base policy, but now that I'm married, I want to do a little bit more. You can also make changes when you have children, because your needs have changed and you want to increase the amount of your coverage. So generally in those situations, those are exceptions to open enrollment time, and you can make those changes. But basically, contact your human resources department, find out what you have, and find out if you have opportunities to purchase additional insurance.
If people have been sitting through here and listening to our conversation, one of the main questions they're going to have is, how much does this cost? Is there some kind of rule of thumb to think about of how much life insurance is going to cost you?
The rule of thumb is there is no rule of thumb. So I would just advise people, just like in general purchase, is really a buyer beware type concept. So life insurance costs can vary widely. It's based on a lot of factors. First, what type of insurance are you buying? You're buying term life or whole life or universal life policy. The guidelines that companies use can be very, very complicated. They use what are called underwriting guidelines, and we do not regulate those. So in other words, we cannot force an insurance company to cover someone or assume a risk that they do not want to assume. So we have had some consumer complaints over the years where people are mad because they'll contact us, say, "Hey, I applied for a life insurance policy with XYZ insurance company, and they denied me coverage." And the fact is that they can. So generally, the cost can be based on your age and your health condition. It's important to shop around. Once you determine the type of insurance coverage you need and the amount that you need, then it's okay to shop around and understand what you're getting, particularly if you're buying term insurance. So it's very important to understand that there are a lot of different types of term insurance. One that is very popular that you may see advertised on TV all the time is typically called annually renewable term. And basically what happens is the policy is only good for a year, and then it renews, but it renews at a higher cost. And that'll just keep going. So if you're going to get a term policy or even a whole life policy, probably the best thing to do is purchase something that has a steady premium that you're comfortable with and that you can afford. And
For a set number of years, maybe.
Right, exactly, for a set number of years, and then you don't need to worry about it so much. But the other factor is companies will also, based on your job situation or family situation, they will also limit the amount of insurance. So, for example, if you're single and fresh out of high school, maybe you have a new job and you're making $20,000 to $30,000 a year, for example. If you go to an insurance company and apply for a $10 million policy, they're probably going to turn you down because their question is going to be, well, you don't have a need for this much insurance. They may sell you a $100,000 policy, for example. They're going to try to limit on how much that you purchase. For one, you probably can't afford that big of a policy anyway. But the other thing the insurance company doesn't want to do is expose themselves to risk that are outside of their guidelines.
Yeah, I've seen some simple kind of calculators online that talk about your earning potential until retirement, plus mortgage, maybe plus kids' college, and it just basically adds all those things up and says this is kind of what you need. But
Right, and that right, and those are all very very good questions to ask. So sometimes I think with families in particular, even individuals, nobody wants to talk about life insurance.
Right.
Yeah, I mean, I mean, there's nothing exciting about it. At best, it's going to be a depressing conversation, but it needs to
It's
be.
called life insurance, but it's really about death.
Yeah, it's called life insurance, but it's really about death. They don't call it death insurance because that would be very difficult to sell. No one would buy it, so they call it life insurance. But really, what it is it's to provide your loved ones, your family, a financial resource, a policy that's going to pay out to cover the what ifs in your life. So,
Right. That's the security blanket there.
exactly, a security blanket, a very basic question that you can ask yourself before you even talk with your family is very simply, if I die, how would that affect the people in my life? So it's okay to write these things down. So if you were to die, even if you're single, if you were to die, how would that affect the people in my life? So, some questions you may ask yourself is, well, would there be money to pay for the funeral? If I do have a family, how much money would they need to make ends meet without my income? Would they lose their home? And it doesn't matter whether you rent or own. How much does that cost? If you have, if you have children, you're thinking about their education, who's going to pay for that? Now, typically, when people think about their children's education, they're thinking about post high school, community college, trade school, university, what have you. But it's not just about that, because if you have children, or people that have children, you will very quickly learn that paying for your child's education can also happen during elementary and high school.
Yep. There's expenses every year.
There's expenses there. You may need money for childcare should your spouse need to go back to school, so they can increase their ability to earn income, or they may need childcare so you can work. So the questions are endless. So really, a good thing to do is write them down and come up with your own list of questions. And then what that does is it puts in your mind, these are objective questions. And then what that can allow you to do is help you determine a cost. So there's a cost for all of these things. If, with respect to income, for example, if you're making, $3,000 a month, and think, okay, well, I have to make $3,000 a month for how many years until my spouse can get to a point where they can make ends meet, and just use those numbers, and that will help you determine, or at least best guess, how much life insurance do I need.
Well, John, we've already covered a lot and given people something to think about, so I think we're going to wrap it up there. But I think you brought up an important point there. You really want to have these tough conversations with your family ahead of time, because our helpline gets calls all the time from people who've had relatives die, and they think they may have had a life policy, but they're not sure where it is. They don't know the company's name. Some of the things you can do are look at your loved one's bank statements or checkbook to see if they've made payments to an insurance company, and then maybe look at their phone contacts for an insurance agent, and then maybe check where they worked as well. We covered that as well, to see if they had life benefits there. But if you need help understanding life insurance, we've got all this information on our website. It's tdi.texas.gov. And if you've got another question that we didn't cover or that you can't find in there, you can also call the helpline. And that's 800-252-3439. So for John Carter, I'm Ben Gonzalez. This is TDI.